My goal today is to spend roughly $2,000 with Vanguard and Index Fund ETFs. This is money that I have put aside throughout the past 3 months. So this is dollar cost averaging. I put money aside and now every quarter I invest. It doesn't have to be every quarter. It could be every month, every other month, once a year. The timeline doesn't matter. The fact is it's a predetermined time frame that I know I'm going to invest my money. And today it's $2,000. How about we just start with the one we were discussing, or VOO, which is mirroring the S&P 500. So this is VOO. You can look it up just as you would any other stock symbol on whatever platform you want, but this mirrors the S&P 500. Again, this is the ETF, so there's not a minimum. I just buy it for whatever price that it is at that moment. Right now it's $287.46 as of today, June 16th, and it is after 1 p.m. here in Phoenix, Arizona, so the market is closed. This price isn't going to change today. This also means that my purchase won't go through until tomorrow morning. But this is what we're looking at. There's a lot of information on here that is incredibly helpful. One thing that I highlighted before that I really like is seeing what companies are in that mix and also what industries it supports. Now, as we saw in my allocations, we know that for these index funds like VOO, I'm a little bit heavy on it since I did some shopping in March. So the reason that I want to show buying this one is, one, pretty happy with where the price is right now. I like the S&P 500. And also for the second reason, I want to highlight that this is the first of the 4 that I had my own mother purchase. That's because the S&P 500 is a great representation of the market. I like that it's the 500 largest US companies, and it's just a great way to grow your money. I still get a lot of dividends from this as well. Dividends are payments that those companies give you out of the profits that they've made. So it's money right in your pocket that you can then reinvest to buy more of those VOO shares. So this is one of the 4 that I had my mother buy. So let me share my screen. Sorry it's not the whole screen, but I'm trying to be smart. I don't need anybody stealing my portfolio. But here we have the options. I just went into VOO and clicked buy. Here we have the options to buy or sell, the symbol. I am going to buy just 1 share because I'm a little bit heavy on it. And then order type. You can do market or limit. These are the 2 that I use. So market will just buy it at whatever price it is at that moment. So when my order goes through tomorrow morning, whether it went up or down a little bit from the 286 that we just saw, if it went to 290, it'll buy it at 290. If it goes down to 285, it'll buy it at 285. It's just whatever the market price. With limit, you can actually set the price and say, hey, I only want to buy it when it's at 286. I can do that, and I do that a lot of times when I'm buying like this outside of market hours to ensure if something crazy happens after market hours, I'm not paying that price for it. But just for the sake of making it easy, I'm going to do market so we can see what price it's going to buy at, roughly. Commission is free. This is really important. I only trade on portfolios where I don't have to pay a fee to buy or sell. Vanguard is one of those. So I do that. It's as easy as that. I click continue. And there it is. So now I get an error that the market's closed. It's not going to go until tomorrow. That is okay with me. And there we go. I'm going to have a whole brand new share of VOO tomorrow. Now, I've mentioned before in previous videos that I love dividend investing. I have a whole separate portfolio where I own individual companies that are known for paying dividends. And as I just mentioned with VOO, dividends are when a company takes the profits that they made and gave it to their shareholders. And this is done on usually a quarterly basis, sometimes semi-annually, sometimes monthly. It can vary, but there's companies that are known for being dividend paying companies. The next security with Vanguard is one that focuses on owning those particular companies. So let me show you what that one is. So this is VYM with Vanguard. It is the high dividend yield ETF. Things I like to see, you can see the product summary here and what that ETF is focusing on. I look at the expense ratio, still good at 0.06%, a lot better than that mutual fund, just saying. Right now it's at 81.77. Scroll down here. Looks like it has 393 different stocks within that Index Fund ETF. We can see the categories, right? So you might be really interested to see the percentage in healthcare right now. With everything going on with COVID-19, maybe that's something you have a certain opinion on. And so knowing what percentage of this portfolio is healthcare could make a difference to you and if you purchase it. Again, the companies are spread out over multiple industries, and then you can see the 10 largest holdings. All right, so let's go ahead and buy some VYM. Again, I'm only gonna do one share of this because we saw I was a little bit heavy in this area. But again, I wanna buy this because it is the second one that I recommended my mother get. And that is because dividends are sexy, dividends are fun, they're addicting. It makes investing fun because I think we can all agree that we want to retire and let our investments pay for our lifestyle. Dividends are a great way to do that. So I had her get this one because it's exciting to see those dividends roll in and the benefit is incredible. So I'm gonna buy just one share. See what I do for you guys? I buy all the things I wouldn't normally buy. Again, I'm gonna do market. You know, and I'm not too sure. I think this price differs from what we saw on the last screen. I wonder if it's just because it's updated at different times. It's a little bit off. So I don't know, if you know the answer to that, why it's different on the two screens, comment down below because I noticed that and I'm not quite sure why that is. So again, I put in the order at market. It's gonna go in tomorrow. So it probably won't be exactly 81.39, but for the sake of argument, we'll go with that. All right, so now let's move to the REITs. As I mentioned, these are real estate investment trusts, and I love these. I think that REITs actually contributed the most to my dividends in 2019. I got about $1,500 throughout the year, and a lot of that came from REITs. The reason is that they are obligated to pay out 90% of their profits in dividends. So they have to give out their profits to their investors. Now, the downside is these are taxed a little bit differently than anything else. So I would recommend checking with a tax advisor about how that really impacts you, or just be prepared for when you do your taxes that these are gonna be taxed a little bit differently. So today I'm gonna focus on VNQI. This is real estate that is outside of the US. No US real estate. Great way to hedge risks, right? There could be some real estate crisis that happens in the US, and this one would protect me because it's all international. Usually when you see ex-US, it means except US. All right, VNQI, here we go. Now, I looked this up before, and I think I wanna buy about 5 shares of this one. Because as we saw, I need to focus more of my money on the REITs because that's lower for my allocations. I'm gonna do market. It is going to calculate it for me at $255. Ooh, even numbers, I like when that happens. So let's take a look at this one. VNQ. Again, the expense ratio is a little bit higher at 0.12. When I talk about real estate, this is what it's talking about. So it's talking about office buildings, hotels, and other rental property. So not necessarily like consumer housing. I know a lot of us saw the housing crash in 2008, and so maybe rates make you a little bit nervous, but take a look at the information because there is some good variation here. You can see the diversification here. I love looking at this. So you can see how much of it is residential. You can see all the different office, industrial, hotel, really get an idea of what you're buying when you're buying this security. And you can see the 10 largest holdings if you want to research those companies to see where most of the money is. Now, I did some calculations earlier at the close of market, and I know that I want to buy about 6 shares of VNQ. And again, I'm gonna do it at market. It's good for the day. Gets me at $494.58. VNQ is another one of the securities that I recommend my mother get. The reason is because it's a great diversification. Because it's real estate, it's a little bit different. And I love real estate investing. But owning a REIT is a lot easier than having to wake up at 2 o'clock in the morning because my tenants in my rental property had an overflowing or clogged toilet or something like that. So it's a great way to invest in some other areas, low maintenance. And the other reason is because of those dividends, because of what I mentioned, that they have to pay out most of their profits. I like that money coming in, and then I reinvest that to buy more VNQ, and that's why it's one of my favorites. So I definitely had my mother buy some shares of VNQ. So I want to make sure that I diversify in other countries as well. Just as I mentioned for the international REITs, I want to look at that for my index funds. So the first one that I'm going to look at is VXUS, and this is the Total International Stock. When we look at this product summary, we see that they are looking to track the performance of Global All Cap ex-US Index. So this is companies located outside of the US. Remember I said EXUS means except US. Again, we can see what regions that they focus on, and I love seeing these companies. I am familiar with Nestle, I'm familiar with Toyota, Alibaba. I'm pretty sure you've heard of Alibaba. If not, I mean, look it up because it's huge, it's a giant. Because I'm familiar with these names, I'm a lot more comfortable investing in them. And if you look at this, the number of stocks in this security, 7,455. So by owning 1 share of this, I own a piece of that many companies. Granted, it's gonna be a really, really, really small piece of that company, but it's still fantastic diversification. Now, in hindsight, I probably should have started this video by saying you could watch me buy 7,000 companies in like 20 seconds. Probably would have been a good bait to get people to stick around for this video. But you know, hindsight's 2020, maybe the next video. But I'm going to purchase over 7,000 companies right now. I know that I want 6 shares of VXUS. Again, I'm gonna do market. It's good for the day, $306.06. Bam! The next one really addresses my love of dividends and also my love for diversification, and that is VYMI. Sounds familiar? We already bought VYM, which is dividend paying companies, but it's in the US. Aha. So now we're looking at the International High Dividend Yield ETF, VYMI. So this focuses on ex-US High Dividend Yield Index. It has probably the highest expense ratio of any of the ones I own in this portfolio at 0.27, and it is on the riskier side. If we scroll down, we will see again the regions that it focuses on. Emerging markets, we're gonna get to that in a second, and I'll dive into what those really are, what countries they are. And here we see the companies that are the 10 largest holdings in this security. So again, Toyota, we see that one again. We see HSBC. Some of these look a little bit familiar hopefully. So this is what I'm buying when I'm buying VYMI. All right, here we go, VYMI. I know I want 5 shares because I calculated that before based on the $581 that I have left over. Market, $262.95. Getting the hang of this yet? It's kind of easy, right? Well, it's probably easier to watch me spend my money than it's been for me to save it up over the past 3 months. I mean, let's be honest here. I'm doing the hard work. It's super difficult work. All right, so I have 2 securities left. Are you still with me? I hope you're still with me. Despite the fact that this one is definitely kicking in for me, I hope that I've been able to convince you that diversification is hugely important and index funds are a great way to hedge a lot of risk. Also, I hope that I've convinced you that looking outside of your home country, in this case, my home country is the United States, but this is incredibly important to hedge risk and also get more gains. If I've been unable to convince you to this point, then I'm gonna call in some backup with the help of The Intelligent Investor by Benjamin Graham. Benjamin Graham is the mentor of the great Warren Buffett, and so I think he's worth listening to. I'm going to refer to page 187 because no one anywhere can ever know what the future will bring at home or abroad. Putting up to 1/3 of your stock money in mutual funds, let's just remember what we said about mutual funds. This was written a long time ago. That hold foreign stocks, including those in emerging markets, helps ensure against the risk that our own backyard may not always be the best place in the world to invest. Important stuff, take a read. I'm still trying to work my way through it, but I saw that and thought, hey, that's relevant to what I want to talk about today. So, emerging markets, let's talk about it. Let's look at the Vanguard VWO, which is Emerging Markets ETF. Emerging markets, we're looking at China, Brazil, Taiwan, South Africa, and high potential for growth, but also this has a lot of risk. We can see that it's number 5 on this scale. We see an expense ratio of 0.10, important for long-term goals. So this one, I expect a lot of movement, a lot of volatility. Emerging markets, you know, a little bit more susceptible to changes, but I know that when I'm putting money here, it's for the long haul. I'm not worried about what happens tomorrow, next month, even by the end of the year. I'm worried about how it does over time. All right, VWO, let's do this. So I calculated with the $318 I have left to invest today, I want to buy 5 shares. So let's go ahead and do that. VWO, we're gonna do 5 shares. $199.45. Let's do it. See, this is my favorite kind of shopping. Isn't this fun? Pour yourself a drink, play some music if you don't have to worry about copyright strikes, and ta-da! All right, so you know what's fun is all of the dogs in my house right now decided that now is the time that they want to run around and play. So if there's dogs running around or if you hear background noise, that's them. But by the way, this is a great plug to say that dog sitting, see, is a great way to earn some extra cash for investing. So I guess that is a benefit. But if you hear weird noises or see weird things, that's them. Now, the next thing I'm sure you are wondering about is the 4th security that I suggested for my mom. So I'm gonna cover that right now. But before I do, I know that you've already subscribed. But if you haven't and you're trying to hide from me, I see you, and do it now. Please, please, because that really supports me. And leave a comment down below as well, because I wanna know if this was helpful, if you learned something new, if you liked it, if there was something that I missed, please comment because I want to keep the conversation going. Now, without further ado, here is the 4th one that I recommended for my mom. Now, this is going to be really the safest one that we're going to cover today in this portfolio, and this is bonds, or BND with Vanguard, the total bond market. Now, bonds are a little bit different than stocks. Whereas with stocks, you own a piece of the company. With a bond, simply put, you're giving a company or the government a loan. So there are US Treasury bonds, which maybe you've heard of. There's also company bonds, but it's really giving them a loan and they pay you interest. So they're safer in that regard because it's a loan versus owning a piece of the company and then following their performance. So I recommended this to my mom because it really balances out her portfolio with those 4 securities. We have a little bit of risk with the REIT and the dividend paying companies. The S&P 500 can be a little bit volatile. So this gives her a little bit of safety. You'll also see bonds in conversations about retirement funds and 401ks, because as you get closer to retirement, you typically want to move away from stocks and into these bonds. So I'm starting with having these in my portfolio. Right now it's a smaller bit of the allocation and I don't need to put too much money into it today, but I did want to cover it. So this is BND. You'll see product summary here. Now this even first bullet provides a lot of stuff that I could even do another video on, or you can look up on your own. Let me know down below if you want me to do a video on it. But what this says here is that it provides broad exposure to the taxable investment grade US dollar denominated bond market, excluding inflation protected and tax exempt bonds. So there's a lot to be said there. Inflation protection, tax exempt, that sounds pretty exciting, doesn't it? Doesn't it? You wanna know more? I know it. This has the lowest expense ratio. Obviously it's a loan, right? There's really nothing to manage. You can even see here, I'm not lying to you by saying it's lower risk. It says right there on the screen. Scroll down, you can see more information about it. So I'm gonna go ahead and buy some of this now. The last one, BND, are you ready? Again, I don't need too much of this because my allocation was balanced, but I did just wanna add a little bit. I have been focusing a lot on stocks lately, so I'll throw some of these in here. The other thing I didn't mention before is that bonds tend to move in an opposite direction of stocks. So when stocks are going up, bonds are going down, and vice versa. So it's a great way to balance your risk. Just wanted to mention that because you know I love diversification. So I'm gonna do one, I'm gonna do market, 88.25. And I have $119 left, by the way. So this takes us right to the $2,000 mark that I was really aiming for in today's purchases. And that is it for my quarterly investing. It makes it so much easier to have a blueprint of where you want to put your money so that when the time comes and you have the money saved up, you already know where it needs to go. I simply had to spend maybe 3 minutes updating my spreadsheet with where the prices were at today and my corresponding balances. I knew right away where I needed to put my money today, and it was easy. The biggest mistake you can make is not investing and not being in the market. Index funds are a great way to dip your toe in the water. And even for experienced investors, it's a great way to diversify and make sure that your performance tracks the market. I'm not trying to beat it. I'm just trying to follow along and catch a ride. I hope you enjoyed this video today. I hope that it was helpful. I hope you learned a couple things, or you just found enjoyment out of seeing how I spend $2,000. So thanks so much for joining. I know that you already subscribed. Please leave a comment below what you thought about this, and I will catch you on the next video. Bye.